Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Wednesday, May the 26th, 2010. Well, a continuation of the trend to the upside today. We don't have the market making a lower high and a lower low, so the previous trend remains in force. And we have a nice extension of the size of the body, of the green body today. And that extension in the size of the green body tells us that the buyers made a more substantial amount of net bullish progress on the day between the open and the close than the previous day. So that's quite a bullish move here. Now, in candlestick chart terms, there is potential for a reversal here. This is what's called a tweezer's top, and we're just talking about these 3 or 4 days of trending action here. And we have roughly equal highs, and there is potential for the market to come off. We do need to watch the low of the current candle for that potential for a lower high and lower low to form. Now, also in the bigger picture, there is potential for that to be a double top pattern as well, where we have the previous trending action, one peak, an intervening trough, and another peak. And the chart pattern will be complete if the market takes out that intervening trough with a close down below there, and I always prefer to see a bearish close down below there as confirmation. Now, the market has once again tested this 86-87 region and has closed up above there. This is a fairly solid close, with the market closing between the high and the midpoint level. So we can say that the buyers closed this market in control, although they did lose some commitment when the market traded off here to close below the high there. So the bulls certainly weren't as strong as they could be, but they have shown quite a bit of strength with this fairly large green body candle. So it was a nice assault on this 86-87 level. Obviously, the area here where there was this downside price rejection previously at 87.41 roughly is very important for this market over the next day or so. If there is a bullish close up above there, then there is potential resistance at 88, and then up above there there's more resistance. So that does become very, very important. Now, the market is trading a long way up above the cloud, so it has an overall positive bias, and also up above the Kijun-sen and Tenkan-sen, which means that the market is bullish in the medium-term and fast-term timeframes. Looking at the Tenkan-sen, that's pointing up quite sharply, and that's reflecting the strong upside momentum that the market has built up over the last 3 trading days. So there's been some good momentum built up there. Interestingly, the market traded down to around that level at its low and found support there. So obviously this indicator, the Tenkan-sen, will be an important area of support if the market does test there again over the next day or so. That's at 86.29.5, and also we have some decent support here, or potential for it, at 86. So if the market does come off with the candlestick reversal pattern, the tweezer's top, then we do need to watch support down below there. Obviously, support at this intervening trough low at 85.14, and interestingly, that was a previous resistance area. It's now turned into support, so that should be watched if the market comes off. And then certainly down at the Tenkan-sen, which coincides with this area where there was buying coming in, we can see the shadows here. That's at 84.11. And interestingly, that's turned flat. And quite often when the Kijun-sen turns flat, it tends to attract price action. And that hasn't happened yet, so there is strong potential for that to happen as well. So really, overall, though, we do need to watch the low of the current candle. It becomes important. A few important support levels on the way down to test this trough in this potential double top. But by the same token, this area here at the highs here, 87, roughly 87.42, is very important. If we have a solid bullish close up above there, then the uptrend will continue on its way.